Hey everyone, welcome to a deep dive into Angel One and how they did in Q2 2025. We're going to really dig into their investor presentation and financials to see just how this digital brokerage is, really making a splash in Indian fintech. So if you're curious about their growth strategy and what we can learn from these reports, stick around. We've got their Q2 investor presentation fresh from October 14th, 2024. Plus, we're pulling some highlights from their financial reports, all those juicy details like cash flow statements.
Yeah, it's exciting to look at a company that's riding this wave of digital disruption, especially in a market that's just like exploding with potential.
Absolutely, and there's so much to unpack here. So Angel One saw their total client base jump a huge 11.2% last quarter, reaching a massive 27.5 million clients.
Wow.
Yeah, there's a 15.7% share of all demat accounts in India. And for those who may not know, demat accounts are basically digital lockers for holding your stocks and investments. Super important these days. And it's not just about quantity for Angel One. They're attracting some serious players. They snagged the second spot for bringing in new active clients on the National Stock Exchange.
So they're attracting the people who are actively trading and shaping the market. That's really significant, especially for a digital brokerage.
Sure, and financially.
Yeah.
They're killing it. Their profit after tax from continuing operations surged an impressive 44.6% to 4.2 billion. Especially impressive with all the recent market volatility. What do you think about this performance in the context of the larger Indian fintech scene?
Well, even though the growth numbers are super impressive, fintech penetration in India is still pretty low. So there's a massive market just waiting to be tapped into, ripe with opportunities. And Angel One seems to be capitalizing on this beautifully.
And I think their digital-first approach has a lot to do with it. Younger generations, they live on their phones, right? They want smooth online experiences, no hassle, and that's exactly what Angel One gives them with their platform. So this user-friendly approach is drawing in younger demographics, letting them expand beyond the major cities into a much wider audience.
Hmm. That raises a really interesting question. Could this digital strategy be the key to unlocking access to these underserved markets? And if it is, what could the impact be on financial inclusion across India?
Really good points. It makes me want to dive into how Angel One is actually building their business, not just to weather market fluctuations, but to thrive in them. So let's move on and look at how they're creating this resilient business model, one that's built to handle the ups and downs of the market.
Yeah, a consistent revenue stream is so crucial in an industry known for its cyclical nature. So let's see how Angel One is facing that challenge.
So I mentioned that their revenue isn't totally dependent on trading activity. And their investor presentation does a good job of showing how each batch of clients they bring in steadily makes them net income over time, creating this stable and predictable flow of revenue, even when the market's swinging back and forth. It's almost like a subscription service. You might not use it every day, but those recurring payments ensure a steady income for the company.
Oh, that's clever. It's like they're challenging the traditional brokerage model. They're using tech to cut costs and boost efficiency compared to these traditional firms. It gives them a real edge.
Yeah, and it's working. Their break-even levels are great, and that recurring revenue gives them flexibility to invest in new areas for growth. They're not just sitting back. They're actively looking to evolve and expand what they offer.
That kind of proactive approach is vital, not just for survival, but to really flourish in this constantly changing world of fintech. It's about seeing what's next and positioning yourself at the forefront of innovation.
Exactly. And that brings us perfectly to Angel One's diversification strategy. They're branching out beyond traditional broking in some really cool ways, showing they're more than just a one-trick pony.
Yeah, this could be a real game changer, especially as they try to meet the evolving financial needs of Indian consumers. Let's see what they're up to.
So they've recently jumped into unsecured personal loan distribution, partnering with 3 non-banking financial companies, NBFCs. And here's the kicker. They're using a no-credit risk model. They use data analytics to pre-approve loans, basically minimizing their risk of defaults.
That's really smart.
Yeah, it's slick.
It aligns perfectly with the growing demand for digital lending solutions that prioritize speed and convenience. Consumers today want financial solutions at their fingertips.
Totally agree. And it's not just loans. They've also launched a fixed deposit distribution platform. This is where things get really interesting. Clients can now buy fixed deposits FDs, a popular savings option in India, as off-the-shelf products, just like picking something off a shelf, without needing a separate bank account.
So Angel One is strategically positioning itself as this all-in-one financial hub. They're a one-stop shop for all these different products, increasing the value they offer each customer and building those long-term relationships.
It's all part of their super app evolution. They're creating an ecosystem to meet all their clients' financial needs, all in one platform.
And that's really smart, especially since they're targeting a younger, digitally savvy segment. They're meeting the expectations of a generation that expects a seamless and integrated experience for managing their money.
Now, one thing that really stood out to me was their big push into wealth management. They're aiming high, looking to cater to high net worth individuals, HNIs, and ultra high net worth individuals, the big leagues of finance.
The wealth management market in India has huge potential, and with their current client base and strong tech infrastructure, Angel One seems really well positioned to tap into that. They're
Right.
already ahead of the game in this competitive landscape.
Yeah, for sure. They're building a dedicated team of experts, expanding geographically, and even developing a specific tech stack just for wealth management services. But here's what's really innovative. They're creating awesome content, like the Investing Pantheon report. It showcases their expertise and thought leadership, and it's a brilliant way to attract those discerning, high-value clients.
And their content marketing goes beyond just showcasing expertise. Take their U.S. elections, mixed signals report, for example. It builds trust and credibility by providing this timely, insightful analysis. And that's essential for winning over HNIs who demand both performance and a deep understanding of how the market works.
Exactly. It's not just about having a fancy platform anymore. You need to prove you really understand the market and can offer valuable insights. And that's something Angel One seems to be doing really well.
This brings up a key question. Can Angel One use their success in retail broking to make a real impact in wealth management? The potential synergy between their different business units is definitely something to watch closely.
Couldn't agree more. But let's not forget the bottom line, shall we? Let's switch gears and look closer at Angel One's financials. After all, great strategies are only as good as the results they deliver.
Absolutely. I'm curious to see how their investments in tech and new products are translating into real financial outcomes. Let's dig into the numbers and see what they tell us.
All right, so Angel One is clearly doing well, but let's break down their revenue streams a little more to see where this success is really coming from. It's kind of like taking a peek under the hood to see how all the parts work together, you know?
Great analogy. So their gross broking revenue, which is mainly from brokerage fees and transaction charges, still makes up the biggest chunk. It was 62% of their total revenue in Q2 2025. This includes revenue from different instruments like equities, commodities, and currencies.
And I'm guessing their cash and derivatives trading, like futures and options, F&O,
Mm-hmm.
are the real heavy hitters within that segment, right? Given their popularity with active traders.
Yeah, exactly. Their investor presentation highlights that cash and F&O are major contributors to their net broking revenue. But what's really interesting is the growth they've seen in their assisted business. This caters to clients who, prefer a more personal approach, those seeking guidance and support.
You mean like having a dedicated advisor or relationship manager to help navigate the market? Kind of like a financial wingman, which can be super helpful, especially for new investors or those who don't have the time to constantly track market movements.
Exactly. And Angel One has seen impressive growth there, both in terms of their net broking income and their EBIT margin, which basically tells us how much profit they're making from their core operations. They've been strategically expanding their network of partners, including broking partners, mutual fund distributors, point-of-sale personnel, to reach a wider audience.
So they're kind of creating this hybrid model, combining the convenience and low cost of a digital platform with that personal touch, the human interaction and guidance. Seems like a good balance between tech and human connection.
Yeah, it's proving really effective. And a key factor here is their focus on empowering their partners with data analytics, giving them valuable insights, real-time updates on leads, investment reminders, potential growth opportunities. This data-driven approach helps partners anticipate what clients need and offer solutions that are tailored for them.
It's like giving their partners superpowers, right?
Yeah.
Being able to predict what their clients need even before they ask sets them apart from traditional brokerages that often rely on just generic advice and, broad marketing.
Now, let's shift gears and look at their client funding book. This is the pool of funds that clients deposit specifically for trading with Angel One. As you mentioned earlier, it's grown significantly, hitting $42,628 million in Q2 2025.
That's a serious chunk of change. What I find impressive is that their exposure per client is still relatively low, meaning they're not overly reliant on a few big fish. Their funding book is spread across a wide range of customers, which diversifies their risk.
Definitely, that's a big part of their financial stability. And their consolidated balance sheet shows practically no MTAs or non-performing assets in their client funding book. This is mostly due to their strong risk management and the fact that client funds are secured by their DMAT holdings.
It's like a safety net for both the company and their clients. Gives you confidence knowing your money is safe with Angel One, even when the market's a bit shaky.
Now, looking at expenses, their total expenses in Q2 2025 reached $9,439 million. This is a big jump from the previous quarter, but we need to keep in mind those one-time expenses like their sponsorship of the IPL, a strategic move to boost brand visibility.
Right. Those big marketing pushes can impact the numbers initially, but they can also lead to long-term benefits by increasing awareness and attracting new clients. It's like an investment in their future growth.
Exactly. And if we look at their cost to net income ratio, which measures how efficiently they manage expenses, it's still a healthy 52.3% for Q2 2025. So their revenue growth is outpacing their expense growth, a
Okay.
good sign of financial health.
So it's not just about making money, but also about managing it well, right?
Yeah.
It's finding that balance between investing for growth and running a lean, efficient operation.
Absolutely. And Angel One seems to be doing a great job of this. Their tech investments aren't just about creating a flashy platform, they're also about automating processes, reducing manual work, and making their operations more efficient.
This allows them to really focus on what matters their clients and those ambitious growth strategies. A smart way to improve both a customer experience and operational efficiency.
One area where we see a strategic increase in spending is employee benefits and ESOPs, those employee stock ownership plans. This is likely because they're expanding aggressively into new areas, like wealth management, which needs specialized talent and expertise.
Yeah, it makes sense to invest in your people, especially in such a dynamic industry like fintech. Attracting and retaining top talent is key for driving innovation and ultimately sustaining growth.
Their investor presentation really highlights this dedication to building a top-notch team, with both domain expertise and technological skills in wealth management. They've also been expanding geographically, bringing in relationship managers to serve Tier 2 cities.
So it's not just online, they're also building a physical presence to give that personalized support to clients in different regions. Another example of that hybrid approach, blending the digital and physical to reach a broader audience and offer a more customized experience.
It seems like this hybrid approach is a recurring theme in Angel One's overall strategy. They're seamlessly blending the power of technology with that human touch to create a unique and appealing value proposition for their clients. It's proving to be a winning formula in today's evolving financial landscape.
And the market's definitely responding. Their client acquisition numbers, revenue growth, profit margins, all point to a company that's on the right track. They found a winning formula, but the challenge now is keeping up that momentum and adapting to the ever-changing market.
You're absolutely right. We can't ignore the potential challenges and risks ahead. The fintech landscape is constantly changing, new players are popping up, and competition is getting fiercer.
Exactly. They can't just sit back and relax. They need to constantly adapt, innovate, and stay ahead of the curve to keep that competitive edge. It's a fast-paced game that requires both agility and, foresight.
Before we move on, can we go back to something you mentioned earlier about the role of regulations in building trust and confidence for retail investors? We've seen how implementing peak margin norms and other regulations has actually helped the industry grow. Can you talk more about that?
Sure, regulations, while sometimes seen as roadblocks, are actually crucial for creating a fair playing field and building trust in the financial system. Take the peak margin norms, for example, which were introduced in phases. They were meant to reduce systemic risk by making sure clients had enough margin for their trades. This helped curb excessive leverage and, speculative trading, which could have really destabilized the market.
It's like setting up guardrails to protect individual investors and keep the market stable and fair.
Right, and this has really boosted confidence among retail investors. They see the market as more regulated and fair, which encourages them to participate more actively. And that drives growth in trading volumes and dematted accounts.
Well said. Regulations, when done right, can actually be catalysts for growth, benefiting individual companies like Angel One and the whole industry.
That's a great point. It highlights how regulations, often seen as restrictive, can actually create opportunities for innovation and sustainable growth in finance. They provide a framework for responsible growth, making the environment healthier and more stable for everyone involved.
Now, with that in mind, let's look ahead at Angel One's future prospects. What are some key questions and scenarios we should think about as we explore their path forward?
We've really dug deep into Angel One, their performance, strategic moves, and financials. But I'm curious, what's your big takeaway from all this? What does it tell us about their position and their potential going forward?
Well, if we, kind of step back and look at the bigger picture, Angel One isn't just riding the digital wave, they're shaping it. Their tech-focused approach, the focus on customer experience, and their drive to innovate these are what's fueling their growth in this, rapidly changing and super competitive industry.
Yeah, and it feels like they're playing the long game, not just looking for quick wins. Their move beyond traditional broking, their push into wealth management, their investments in other fintech platforms, it all suggests they're thinking ahead, seeing future trends, and getting ready for lasting success.
What's really impressive is how adaptable they are and how willing they are to embrace change. They started as a traditional brokerage, but they saw the power of the digital revolution early on, and they successfully shifted into a top fintech player. They're not afraid to experiment, to try new things, and to challenge how things are usually done, which is so important in such a dynamic, fast-paced industry.
It's that willingness to embrace change that really sets them apart from those who, lag behind. Angel One is nimble, agile, and driven by data. They're constantly learning, iterating, and evolving, almost more like a tech startup than a traditional financial institution.
And that data-driven approach is a key differentiator. They're using data not only to optimize their own operations, but to give their partners more power and create those personalized experiences for their clients. They're using data to really understand client behavior, to know what they'll need, and offer solutions that are custom fit to their financial goals.
It's like they're speaking their client's language, understanding their needs and what they want on a much deeper level. Not just throwing random products and services out there, but offering solutions that are actually relevant, meaningful, and tailored to each client's financial journey.
Exactly. This customer-centric approach is really at the heart of their success. They're not just focused on getting new clients, they're building lasting relationships built on trust, transparency, and real value.
And I imagine that's going to be crucial for their success in wealth management. It's a tough market with big players and lots of competition. But Angel One does seem to have some advantages. Their existing client, their solid tech infrastructure, and that data-driven approach.
And don't forget their content marketing, which is quite smart. By creating insightful reports and, thought leadership pieces, they're not just showing off their expertise, they're establishing credibility in wealth management. They're positioning themselves as trusted advisors, guiding clients through those tough financial decisions, not just another brokerage trying to sell them something.
It's a smart strategy, and it seems to be working. They're creating buzz, getting notice, and building momentum. But can they keep it up? Can they handle the challenges, beat the competition, and really become a force in wealth management?
That's the big question. The wealth management market has its own unique dynamics, different from retail broking. The clients are more demanding, their needs are more complex, and the stakes are way higher. Angel One will have to show that their tech, their team, and their approach can deliver the highly personalized service and that high-touch experience that these high net worth individuals expect.
It's a big challenge, but also a huge opportunity. If they can figure it out, the rewards could be massive. They could disrupt the traditional wealth management industry, creating a whole new model for accessible, transparent, and tech-driven financial advice. It could be revolutionary for the whole sector.
And that's what makes Angel One so interesting to watch. It's not just about financial performance and numbers, it's about a company pushing boundaries, changing the game, and trying to make a real difference for their clients. It's a story of ambition, innovation, and that constant pursuit of growth and positive disruption.
So for you, our listeners, what are the key takeaways from our deep dive into Angel One? Here's something to think about. With their ambitious plans, strong performance, and commitment to innovation, how do you see them shaping the future of Indian fintech? Will their focus on digital-first solutions and data analytics be enough to challenge traditional financial institutions as they move further into wealth management?
Those are great questions to consider as we watch Angel One's journey continue. They're a company worth watching, learning from, and a company that just might surprise us all with what they achieve in the coming years.
And on that note, we'll wrap up our deep dive into Angel One. We encourage you to check out their website or follow them on social media to stay updated. Until next time, keep learning, keep exploring, and keep diving deep into the exciting world of finance and technology.